Bitcoin is a cutting-edge digital money that eliminates the need for banks and middlemen and permits safe, decentralized, and international transactions. It was developed in 2008 and functions on a transparent blockchain network, providing a limited and unreliable type of currency that puts conventional financial institutions to the test. Here is the greatest Bitcoin explanation of all time summarized in 8 key points. Number 8. Transactions recorded on a public, immutable blockchain. The blockchain, a decentralized public database that documents each and every transaction ever completed on the network, is the essential component of Bitcoin. In order to create an unbreakable chain, the blockchain is made up of successive blocks, each of which comprises a batch of transactions, a timestamp, and a cryptographic hash connecting it to the one before it. Because changing any transaction in a block would alter its hash and break the chain, tampering would be computationally impossible. This structure guarantees immutability. Thousands of nodes around the world replicate and store the blockchain, and each node must reach an agreement over its current status. Anyone can independently check transactions thanks to this transparency, fostering trust without the need for middlemen. By guaranteeing that each Bitcoin may only be used once, the blockchain also stops double spending. Number 7. New Bitcoins created by mining through proof of work. By using strong, specialized hardware to solve intricate mathematical riddles based on the proof of work method, miners increase the supply of Bitcoin. To create a block hash that satisfies a network set difficulty objective, miners gather unconfirmed transactions into candidate blocks and continually modify a value known as a nonce. This takes a tremendous amount of energy and computing work. The block is broadcast to the network by the first miner to discover a valid hash, and nodes confirm it and append it to their copies of the blockchain. In addition to providing fresh Bitcoins as rewards to miners, which encourages their involvement and preserves network integrity. Mining also secures the network by making it unfeasible to change transaction history. Number 6. Fixed supply capped at 21 million Bitcoins. There will never be more than 21 million coins because of the hard cap imposed by the Bitcoin system. Bitcoin is a deflationary asset by design because of its scarcity, which is built in its software and cannot be altered without network-wide consent. Because of its restricted supply, Bitcoin is shielded from inflationary pressures and currency devaluation. Unlike fiat currencies, which governments can issue whenever they want. Many people refer to Bitcoin as digital gold because of its limited supply, mobility, and capacity to be divided, which positions it as a hedge against inflation and a store of value. Nearly 20.9 million Bitcoins have been mined. As of mid-2025, the remaining amount will be delivered progressively through mining rewards until about 2014-0. Number 5. Transactions are irreversible and pseudonymous. Once verified on the blockchain, Bitcoin transactions are final and cannot be cancelled or revoked by anybody. Although its finality shields recipients from fraud and chargebacks that are frequent in conventional payment systems, it also puts the onus on users to properly check transactions and secure their wallets. Users send and receive Bitcoins using cryptographic wallet addresses rather than their real names, making transactions pseudonymous. Although every transaction is publicly visible on the blockchain, a certain amount of anonymity is provided by requiring extra information to link wallet addresses to actual people. Bitcoin is not entirely anonymous though, as blockchain analysis methods can occasionally identify individuals and track transaction flows. Number 4. Mining reward halves approximately every 4 years. The halving procedure, which divides the incentive miners earn for adding new blocks in half roughly every 210,000 blocks, or roughly every 4 years, regulates the rate at which Bitcoin is issued. By slowing down the rate at which new Bitcoins are issued, this mechanism gradually increases scarcity and pushes the price upward. 50 Bitcoins per block was the starting reward in 2009. This was cut in half to 25 in 2012, 12.5 in 2014, 2016, 6.25 in 2020, and most recently, 3.125 in 2024. A key component of Bitcoin's economic structure is its predictable supply schedule, which guarantees that the total supply never surpasses 21 million and offers a transparent monetary policy in contrast to other conventional currencies. Number 3. Bitcoin is global and borderless. Anyone with an internet connection can access the global, borderless network that powers Bitcoin. Bitcoin enables users to send and receive money anywhere in the world without the need for middlemen, delays, or geographical limitations that characterize traditional financial systems that rely on banks, currency exchanges, and regulatory regimes. For underbanked or unbanked people, this capability facilitates financial inclusion, remittances, and quick, inexpensive cross-border transfers. Due to its decentralized structure, which exempts it from national laws and monetary regulations, Bitcoin is an effective instrument for protecting money and promoting trade in areas that are politically or economically unstable. Number 2. Security relies on cryptography and decentralized consensus. Proof of work, a decentralized consensus system, and sophisticated cryptographic algorithms form the foundation of Bitcoin's security paradigm. By using digital signatures and hashing algorithms SHA-256, cryptography protects wallets and transactions, guaranteeing that only legitimate owners can spend their Bitcoins and that transaction data cannot be changed. It is computationally impossible for a single actor to rewrite history or double-spend coins, since the decentralized network of miners competes to validate transactions and agree on the state of the blockchain. For more than 15 years, Bitcoin's network has been resilient to fraud, censorship, and hacking thanks to distributed consensus and cryptographic security, making it one of the most secure financial networks in the world. Number 1. Price volatility and growing adoption. Historically, a number of factors, including investor mood, market demand, legislative changes, technological advancements, and macroeconomic trends, have affected the price of Bitcoin. Bitcoin is becoming more and more popular with businesses, governments, and even individual investors in spite of its volatility. With big businesses incorporating Bitcoin into their payment and treasury reserve systems, institutional interest has increased. Investor confidence has increased as a result of increased regulatory clarity in many jurisdictions. Bitcoin's increasing popularity as a store of wealth, inflation hedge, and cutting-edge financial instrument propelled its price to a new all-time high of more over $111,000. In May 2025. Exchanges, custodians, payment processors, and decentralized finance apps are all part of the growing ecosystem, which further integrates Bitcoin into the world's financial system. Bitcoin is a revolutionary invention that is changing the way that money, finance, and international transactions are conducted. It is more than just a digital currency. As usage increases, it keeps giving people financial independence and redefining trust in the digital era. If you liked our video, please hit the like button and subscribe to our YouTube channel.